make you a better trader. It doesn't matter that that person's doing 5 lot, that person's doing 1 lot, that person's doing 0.0 that. What it matters is there something in their process that they're doing that you can actually learn from and something that you can apply. So we're going to go through that as well. Once again, these streams are being, or this Zoom session is being streamed live on the Forex Syndicate, on Black Box Trading. There's also a link, so if you're on my Instagram page, you can grab that information. It's on my story, so people can watch this. It's going to be recorded, so you can watch it later. I'll try my best to educate everybody. There's no doubt in my mind there will be hundreds of people that will hate this video. They will say this is not trading, this is nothing, blah, blah, blah. And that's up to you to decide if you got value from this or you didn't. That's your choice. I'm doing this the best way I know how. I am not the best trader in the world. I'm not the worst trader. I am just like everybody else, trying to make a dollar in the market and leveraging my ability and my experience to try and consistently make a dollar. And that is the biggest thing that you can do. The ego belongs with the market. The ego does not belong with your trading. Let the market have an ego. If you have an ego while you're a trader, I guarantee you it will not be a fun time trading. So with that being said, let's start. Okay, so let's take a look. We're going to get a little bit of the monthly candle going on here, monthly charts. So we can see here we've gone from January 2015 to September 1st, 2019. Right away, you know, everyone can probably see, if you look towards the left of the screen, we are in a sort of a low area around $1,000 with gold. And then as we get to 2019, we're up to like $1,400, $1,500 with gold. So what we have here is what we consider an overall uptrend. Oh, I forgot about that. Stable annotation. I forgot about that. Sorry, give me a second. Let me just do this. Clear. Sorry about that. I had to disable everything. I forgot that we are in a weird territory of stupidity and a lot of immaturity. Usually in my Zoom sessions, we don't have that, but I forgot this is public, so I forgot to turn that off. So that's my fault. I just do that. But I mean, once again, it's a perfect example to say, you know, when people do stupid things like that, it just shows that really they're not going to progress much. They're just wanting to get attention. Anyways, so let's talk about this. Let's go through this chart. So once again, we're looking at the monthly chart. We can see right away we have the high and the low. Not necessarily super important, but it's an idea, right? The first thing you want to do is you want to be comfortable with the chart. You want to understand why things are happening and how they're happening. And the biggest thing that you want to take away now is where has been the most information on the charts been. So when you look at your chart, that's the first thing that you want to do on any time frame is where do we have the most information in our charts, right? So if we were to break up this chart and right away, things that catch my eye, the most information is probably over here, being a resistance level, and the most information is probably being over here, being a support level. The reason why I've done that, and this is something that, you know, as you become proficient with trading, you start to see a little bit more, is because of the fact that when I start to go into trading, I see this idea here. This is the most part of this chart, right? If we're on the monthly time frame, we can see that this is probably the meat and potatoes of the chart. Because as we start to chart out other ideas, you have this little bit here, and then we have essentially this little bit over here. So when we break our chart up into, you know, what we have here, 3 sections, where is the most activity being done in this chart on the monthly time frame? You have the most activity from, you know, basically over here to somewhat over here, right? Because when you apply the 80-20 rule, we can see that this is, you know, 80%, 80% of the market. This, just recently happened. This is like 20% of the market, or well, it's like 10%, 10% of the market. And then this is, basically 10% of the market, right? So the fact that we have that, so we know now, we have, these little yellow boxes here representing a smaller portion of the market compared to the bigger portion. So with that being said, we know that the majority of the movements over the month happened over here. So, from a layman's terms, we have, consolidation range all the way in this area over here. So this is, our range, right? We can say that we went all the way up, all the way down, all the way up, all the way down, all the way up, and then we broke out, right? Same thing here, came down, broke up, stayed above here. We hit, we hit this support area over here. So in this instance, this made sense. But then you say, well, Ted, this isn't going to help me over here. This red box isn't going to help. Right, 100% I agree. It's not going to help you. But what it does is it frames an idea in your head of, hey, where were in the previous times, where were there instances where we had a major support or a major resistance? And now looking at the current charts, how can now I apply that looking now at the 10% of the market, which is essentially this area over here? Because this is where we're going to be focused our trading, in this area here. The rest of this area, as we start to go through and we start to look at things, you can turn around and say, this area doesn't matter anymore because it's already passed. And when you see that, you don't have to worry about this particular section. The time that you start to worry about that particular section is when now price in this yellow box essentially starts to move away. So price starts to move away into here. Then you can be like, hey, I need to know what happened in this area over here to then give me the ability to execute a trade based on previous information over here and then also the current information, which is over here. So that's essentially what you're going to try and do, and that's how you're mapping this out. So now that we have our monthly lines on our previous chart and we got a good sense of what's happening, let's take a look at what's happening specifically in sort of our 10% region, or what we considered our yellow box over here, right? So we were looking at the 10% region over here. So right away, there's some things that come to mind. And I think as a trader, you should already start to recognize this. First things that come to mind is these candles look like they're in a sideways pattern. Why? We had the high of 14 or 1550, 1541, 15 whatever, whatever you want to say, and then we have this low here that's being respected because it's not breaking. Remember, this is our highest time frame on meta quotes. So when you see this, it's a pretty good indication that we're holding steady in that respect. The candles are not breaking above 1515. Candles aren't breaking below 1456. If you look at sort of your areas here of interest, that's what you're doing. So right away, because we're on the monthly time frame, what we can do here to give ourselves a high level idea of what's happening, we can turn around and do this. We can say, hey, okay, let's map out this and say this is going to be our monthly support, right? So we could say monthly resistance. So monthly resistance, and what we're going to do is we're going to make this a dark navy color, use the biggest line there, so we have a navy color, and then what we'll turn around and do, we'll say over here, we can say that this is probably going to be our monthly support, right? So we got that, we're comfortable there. These were from previous, these are from our newer area. So with that being said, we can see that there's definitely a pattern. You can see, we basically broke out, we hit monthly resistance, we pulled away, we came back down to monthly support, pulled away, we ended up coming up here and then breaking all the way back down, and now this candle over here is sort of struggling. This final candle being in December is probably indicative of the fact that we're coming close to the holidays and prices are going to always move. Over here, we had a lot of discussion with trade talks the last month. We had a lot of movement with that. and there was decisions made with trade talks, so that pushed the market down a bit. So now what we'll do is let's drop into our weekly timeframes. So you can see based on our weekly timeframes, what do we have here? So perfect. The weekly time frame essentially matches up with our monthly support, right? You can see here, we're holding very, very well here. We're not moving too much. We have to understand that, but we're doing well. Now, here's an idea that I like to look at and I like people to work through is understanding as we go through this idea here, what do we think is going to happen with gold at this point? We're holding support here. We broke up over here. We started to move down. Remember, we are on a downtrend a bit. You know, with the monthly candles holding support. It started to pull back away from this area. So now what does that mean? Now let's play a story. Okay, so when you're looking at the charts, we're looking at where did price go and why did it go there? Why did price leave that area? And now what would be the causes for price to go back into that region? So there is certain things here that we have to talk about, certain concepts. So the first concept is the fact that we had a zone, right? So we can all agree that there was probably a zone over here that we pushed out of. And that's where we rejected, because once again, when we take a closer look and we look through the particular candles that we see at this point, we tapped into this zone, we rejected down, we came back one more time to tap into that zone, and from that point on, we've never come back to that area. So when you review this and you look closely at what's happening, if we look at this from a very elementary standpoint, this was an area of interest. This continued to be an area of interest. And as that area of interest we left, we now start to drop and create almost a step formation. So with that being said, we're starting to step down, right? If you take a look closely, we went all the way up, came to that level, and now we're moving all the way back to this level. Now the question becomes, where are we going? So when we look, these are the questions I want to ask myself is, okay, where did we come from? Where do we think we are going? Why would we go that way? Why would we not go that way? So these are the questions that you're going to be asking yourself, right? Because gold, especially, or any other currency pair, has both, you know, obviously the technical side of trading and also the fundamental side of trading. So when we look at this and we go through this particular idea, we know that gold fundamentally works with the US dollar. It works in areas of instability. It is a safe haven for when the equity market is doing poorly. So we know that there's particular things here that we want to leverage and understand, and we have to now keep those ideas in the back of our head. So if I was trading, say, for example, the Aussie dollar, we know right now in Australia, they're struggling. The economy is struggling. There's been a lot of talk about how the economy is pulling back, things of that nature. So the Aussie dollar is starting to fail a bit, right? So we know that the Aussie dollar is dropping. We look at the pound as an example, right? And you say with the pound, you say, okay, well, Ted, what's happening with the pound? Well, we just had a general election in the UK. Elections bring stability back. The reason why elections bring stability back is because now there's a renewed sense of confidence in the government, if it's a good government, right? So everyone thinks that Boris Johnson is going to get stuff done. So there was a lot of push with the pound, and the pound strengthened. But for most of the year, the pound was very weak. Why? Because there was a lot of indecision around Brexit. There was a lot of political discussions. People wanted Brexit. They didn't want Brexit. There was a vote. There was no vote. There was this. There was that. So being able to talk freely about different political events or major economic events with the pair that you're working with will always give you a little bit of extra boost in terms of your analysis. As an example, if we believe that the US is going to continue to gain momentum or gain strength, we know that more than likely our initial thought process right now with gold is probably going to be very accurate, correct? Because gold, we believe, is a safe haven for the US dollar. We believe that it works well against the equity markets. We know those ideas. We also know that it works, if there's any sort of instability with the government. But if we believe that there's going to be stability back in the US dollar, people are going to leave gold and they're going to move their money back into the US dollar. They're going to use the US dollar for more trade. They're going to use the US dollar to purchase more equity. There's going to be purchases of different businesses in the US. There's going to be growth in the economy. So these are simple ideas that any economics book will teach you, any sort of website with news will teach you, things of that nature. But these are things that you have to know in the back of your head. When you're trading a pair, whether it's the Canadian dollar, the US dollar, you have to have an underlying understanding of what that current economy is doing. You don't need to be an economist. You don't need to be a genius, but you need to be able to understand that, hey, shit's going on, whether it's good or bad, you got to be on top of that. So instead of binging Netflix at night and watching, the last 6 seasons of Rick and Morty, maybe what you should be doing is flipping on CNN or BBC or Bloomberg or some sort of news channel where you can gain a little bit of that information and you can say, hey, this makes sense, or I didn't understand that about the economy. What's happening there? And you get a little bit as you learn a little bit, then start to understand the structure of the economies, and the information that you start receiving just becomes an additional piece of the puzzle for yourself. At the beginning, it's very difficult to get economic information down because there's so much of it there. But if you just focus on the high-level news events and the major economic events of a country, you're going to have a leg up more than a leg down. And you can do that by looking on like say Forex Factory or a news site where they show all the different high impact news releases. And those news releases, for the most part, are regular. There's the major news releases come out. People like to trade NFT. People want to trade the FOMC. They want to trade those ideas where there's going to be a lot of, every so often, have interest rates decisions, right? Because the banking policy or the monetary policy in those countries are affected every quarter. So there's going to be changes in interest rates. You can now anticipate that, oh, hey, in March or January, there's going to be some sort of discussion about interest rates. Are they going to keep them the same? Why would they keep them the same? Why would they take them away? So these are things that as you progress in your trading career, you're going to get better at. And you're going to anticipate being like, hey, Donald Trump's saying something stupid again, gold's going to fly. Or Donald Trump just said the U.S. economy is the best in the world, gold's going to dump. And you're not going to turn around and say, oh, well, why did that happen? You're going to rationalize and realize that, hey, somebody made a comment somewhere which knee-jerk markets. And that's what I think people have to understand. And when they go through the market, they'll get a little bit better and you get a little bit more of an idea how the market's moving. So now that we've mapped out our weekly time frame and we sort of have an idea, what we can do to help ourselves with this is essentially for a quick point is maybe give yourself a little bit of a resistance level right here. So what we end up doing here is we give ourselves a resistance level on this weekly, because what that allows us to say is, hey, listen, as we start to bounce up over here, I have to be aware that there's going to be some sort of information or something that I have to be mindful of. And that's the whole idea. When you draw support and resistance, when you draw out your zones, they're not definites. These are not 100% accurate. These aren't going to be, and I hate the term to the pip, right? This isn't to the pip. This is to give my eyes an idea that, hey, when we get over here, I should be aware of something. Similar to having side mirrors on your car, having a rear view mirror. The idea is, hey, I should just be aware that there's an alert. that I have to see what's going to happen at better as we go through that. So that's something that you want to look at that point when you're looking at these lines. Because everyone always asks me, well, how did you draw this resistance? How do you draw this resistance? How do you draw this support? It's basically an idea for my eyes to go through and say, hey, at this given junction, at this price level, maybe it's a little bit higher, maybe it's a little bit lower, wherever it's going to be, I have to be cognizant of the fact that there could be an issue there. And that's okay. I'm okay with that the fact there's going to be an issue because I have this little line here that's told me, hey, price may do something funny at this area. And at that point, you turn around and say, well, how can I trade that area? You don't. You wait for price to leave this area or leave this area. And then you anticipate, okay, if we leave and we start to rise above this current line, then maybe our next target is this line over here. And now we're going right back up to 1526. So that's maybe what I'm going to aim for. Not in the long term, not in the short term, but maybe in the long term. I'm going to look at that and say, hey, that's a target for myself. Or maybe I should be aware. What I may do is as we start to move up past this, I have to be aware that this top area, there could be a rejection at any given time. Now, what I can do to hedge or to mitigate those ideas is watch how these current candles form. If I had a huge bottom wick like I have here, or say a high top wick over here as an example, we know that orders were taken at this level and they have to go somewhere. Where do they have to go? They probably have to go back down, probably to this area over here. And you can see when I look at this line right here, it matches up with this area over here. So if there was a zone drawn previously, we would be coming back into that zone. So that's what you're looking for as you start to work through the charts. You're giving yourself an idea and you're saying, hey, there's a whole bunch of orders that are just hanging around here. What's going on? Are we consolidating the break back up, or are we consolidating the break down? I know that I want to take trades above this area because I want to break past this level here, or once we break below here, I know that probably I'm looking at like 1400, wherever I'm looking at where the next zone would be, because for the most part, I know that orders have now captured enough here to continue driving down. What I will also look at is I will also look at the fact that what is the fundamental information that's being spread out. Has the US dollar gained strength? Well, then that would correlate with gold dropping. So when the fundamental data matches up with the technical data, you have like what I would say a two-prong approach, or like you have those two confluences to give you that more idea. Right now there's a lot of instability because Trump's going through some impeachment. So the market doesn't really know how to react. Hence, when we go into the daily candles and when we drop into a lower time frame, look at the daily candle. It's created an indecision, but where did the daily candle finish? Up where our weekly resistance was. And now as we start to go through the weekly levels, you can see how well this weekly line plays with the daily. But when we go through our daily levels. So now if I turn around and map this out and I say, hey, this is a daily resistance right over here, and why I'm marking that out is I'm marking that out so that I know that based on the daily, we have this information here. I can see that for the most part, the daily candles came into 1475, rejected, and left that area. And they kept hitting this. So with that being said, if I know that that's the case, as soon as I see a candle that starts to form here and now pulls back up, and essentially we get a wick which is down there, and we get this candle moving here. When I know that that's happening, I can then say that these orders over here wicks don't lie, that the orders are now starting to leave, and we're starting to move in that direction at that point. And what I'm doing is I'm watching to the left to see where possible targets are. So if I look very closely, and this is very, very straightforward, if I turn around and I see that this candle that we've just drawn is starting to move, right? And we're starting to go bullish. I am now looking first to get past this area over here. Like all these little wicks, I'm looking to try and get past these wicks, right? And what I'm then focused on is I'm focused on filling this area, because essentially this area that we're going through right now is what? Very straightforward. It's a zone. It's a zone. Right? Because in this zone, at any given time, we can see that price rejected this area, but it popped up and then it left. Popped up and then it left. Right? So at this point, because we're still popping into this area and we are holding at this point over here, there's a good chance that if we do continue, we're finally going to break out of that zone. And then you say, well, Ted, how will I know where we're going next? How will I anticipate this? Because, you know, this is great. You show me these candles. You show me how this works. But how do I know what's going to happen over here? How do I know? Right? We don't know. This is trading. We don't know. You're not paid to guess. You're not paid to run ahead of everybody. You're paid to be correct. And what you're paid to be is you're paid to come in second place. This is on your mind all the time. I need to come in second place. This is the time where when you are living your life, you want to be in second place, right? All the other times in your life, you want to get the job, you got to be first place to be the candidate. You want the hot girl or the hot boy, you got to be the first person that they like. You got to be the winner of that. You know, you want a trophy in a tournament, you got to come in first place. You want the most money, you got in a poker tournament, you come in first place. Here, you're going to get paid to come in second place. Why do we want to come in second place? Because what we want to do is we want to allow the institutions, the hedge funds, the dark pools of money, the liquidity providers, we want them to show us the way. We want them to say, hey guys, guess what? We're going up. Gold is going bullish. And you as the retail trader say, hey, great. I'm going to come behind you, and I'm going to pick up your scraps. I'm going to be the person who comes in second place, because now I know that as a retail trader, if I turn around and I know that this is my target, and I see these wicks coming, and I see this support being formed, more than likely the institutions are going to return to that level and then beyond. And what am I looking for my next level? I'm looking to see where we had heavy levels in price. And heavy levels in price were right over here. Why? Because we have a mirror candle to the left over here that went all the way down. So now we need it to go all the way back up, because at some point in the world, all these orders meant something for somebody to go down. We need now the opposite to go the other way. If for whatever reason now, we don't get to that direction, and this indeed is a rejection, now we know where do we have to go. We have to go down, and where are we looking to fill? The orders down over here. So when you map this out, this now becomes your alternative zone, and as we start to break, we're now filling those areas of importance. We know that we're starting to move in that way. So this is the reason why you get paid to wait. You finish second. There is no ego in trading. This is the biggest thing that I can tell you. I don't want to predict things. I don't want to say, well, yeah, we're going back up to 1508. I don't want to be able to say these things. I don't want to say, hey, yeah, this is our next level of resistance because of this over here. I don't want to say that. I want to know that at this point in my trading, what is happening over here, and how can I anticipate what is going to happen in that area? And what am I going to do to get information to make sure that my decision is on the most probable side that we could possibly have? That is what you're doing on a daily basis, on a weekly basis, on a monthly basis, whether you're a swing trader, whether you're a scalper, you are trying to put yourself in the best position to make a correct decision. You do not have to turn around and say, well, hey, look, I got it to the pip, right? Look at this. I was able to get my trade right to here, right to the pip, because I knew that this was a zone. Yeah? What if this was only the zone? What if this was only the zone? We don't have to worry about that. What you have to worry about is you have to worry about, hey, where is the most action happening? Where is the most action happening on my charts? And I can see the most actions happening in here, the most actions happening here. Why? Because what I've done is I've given myself a range between here and here to allow myself to operate in those conditions. And these areas here are nice to haves. Yeah, great. You know what? Like this candle went all the way up and touched that area. Great. You win a prize. Congratulations. Your choice. Pick something from the gallery. It doesn't matter. But wouldn't it be nice just to turn around and be able to take, just a tiny portion? Maybe, we take this tiny portion here. If we look at that tiny portion, so if I turn and I take away this, and we look at this tiny portion here, right? You can look right here, this tiny portion, basically 50 pips. 50 pips up or 50 pips down. It didn't matter. It was 50 pips, right? And you have that, and you look at that information, you can see then what makes the most sense. And based on that information, you are getting a highly probable trade at that point. And that's what you want to do every single time you enter a trade, is what is the likely probability of having a high probable trade. Okay? So now let's move on. Let's look into our smaller time frames. Let's get into the meat and potatoes of things. Right? On our daily, jump into the 4 hour. Perfect. 4 hour. Okay. So we've got these magical lines. We have what we had here, our weekly resistance. We had here our daily sort of resistance, right? You can see that when we go back up here, we can see daily resistance. So now you can see the 4 hour chart is starting to leave that area, right? You can see we had tap, tap, tap. This one tapped down. Where did that go to? Tapped into this area here. So now you can start to play, and now you can start to map out things and map out ideas. You can turn around and say, hey, what do I think is going to happen next? Well, here's the thing. Now you can start mapping out trades. You can say, based on my current probability, I see we're going down. I see we're going down. I see we're going down. I see that this is going down. What can I do? Well, my first target can be this little section here. And once we break that, my next target can be this section here. Because what do we know? In momentum, wicks get filled, right? And how do we know this is momentum? Is because we're leaving resistance areas. We're leaving major resistance areas. So the market is shifting. Market left the monthly, the market left the daily, and now the market's still continuing down. So we have a downward trend. And we know that, hey, let's map this out very quickly. Okay. All right, so here we go. We got a little bit of a 4 hour support. right? So we got a 4-hour support. So let's change this color up. No, that's not a good color. Yeah, we got a 4-hour support. So I know that we have a little bit of a support, but if we have momentum on the higher time frames, chances are these levels on the 4-hour will start to break too. So this is going to start to break down. So you can see right now we're starting to break down a bit. The candle's starting to go bearish. And as we start to proceed down, more than likely we're probably going to come down, fill this wick first because we're in momentum, and then eventually come to this support. This support is drawn, once again, just to guide your eyes, that I know between 1475 and 1473, I probably have a pretty clear path to go down, but at 1473, I have a decision. I might have to eject. I might have to leave the trade. So now as we go into the 1-hour chart, you can see what happened. The 1-hour chart basically bounced up, we bounced down, came back up, now we're bouncing away. But the thing is, when we look here, what's the problem? What's our challenge right now? The 1-hour time frame is still bullish. So we don't have a trade. Even though when we look at the 4-hour time frame, we can see that we're in bearish momentum. We're in bearish momentum here. This candle is struggling to continue bearish. So what do we have? We don't have a trade. This is where now you sit back and you wait. Because why do I want to take a trade when this candle is bullish? When that candle is bullish, this candle's now turning bearish, but you can see we're coming back up to that area, and you can see now it's higher in the, I guess, bearish region than it would be bullish, or sorry, than it would be bearish. But you can see now we don't have enough information as we go through the time frames to say that, hey, we're dropping. So now what do you say? You say, well, okay, Ted, how do I trade this then? You don't. There's no trade. You did all that work for nothing. You did all that work just to say that there was no trade. But you didn't do all that work for nothing. You mapped out an idea in your head that there was no pressure for you to execute a trade. There was no reason for you to hurry the trade. All you did was you prepared yourself for the options, for the possibilities. So now you know that if this candle starts to drop on the hour, I know that I can take trades in this area over here, and I have a clear path going down to here. Why? Because I know on the higher time frames currently we had rejections on the higher time frames. We had drops on the higher time frames. So I know that at this point, if this candle now turns bearish, we're dropping continuously. We don't have to take a trade yet. You don't have to take a trade yet. What you've done is you've mentally prepared yourself to say, hey, if we break below this area here, more than likely we're continuing down. Why? Because we have all this information to support the drop. We went up and down, up and down. We did all that. You can see the previous history of where we achieved that bottom target or that bottom support. We see that happening right now. And all you have to do is knowing that your 4-hour candles are dropping, your hour candle, wait for it to go bearish, your 30-minute candle, maybe the next 30-minute candle, we get something that looks like this, and then the next 30-minute candle drops down here. So that was your trade, 2 30-minute candles. Maybe that's what happens. We don't know. But this is the key to your trading. It has nothing to do with chart patterns. It has nothing to do with indicators. It has nothing to do with anything. But the fact remains is we started down over here. We went up. So more than likely, we're going to have to go back down. Maybe we only go to here. We don't know. But that is the probability that you're going to take. And your risk is very easy. So now what you can do is you can map out your risk. You know that this is a major resistance level. So what I can say is I want to take a trade over here at 1474. My stop loss will be 12. Is very not good. So now what do I have to do? I have to wait. So what I'll have to do is I'll have to wait until the next candle comes down, does this, right? Because now what I can do is I can discount this stop over here, and I can place my stop over here. So with that being said, now if I do that, suddenly my stop is 5 pips, right? We have a 5 pip stop loss now, and I have an 11 pip take profit. We have a 2-to-1 risk to reward. Do you see why that makes more sense? And what you can even do to get even better is what you would do is you would drop into your 15-minute time frame or your 5-minute time frame, and you would say, hey, listen, now on my 5-minute time frame, I can start placing my stop loss over here, watching this candle go down, and now suddenly my risk to reward improves even more. Because now what do I have? When I go through this even on the smaller time frame, I have a 4 pip risk, right? I have a 4 pip risk, and I have a 14 pip reward. So now I'm almost getting 3-to-1, and I have almost no drawdown at that point because I'm working off the smaller time frames. The only reason why I'm working off the smaller time frames is because I've mapped out my trades on the higher time frames. I know that on the 5-minute, this is a major resistance. This is our daily resistance. We know that. When I start to move into the higher, the smaller time frames, I can see candles are leaving that daily resistance. There's opportunity there for me, so I can start to scalp or start to look through my smaller time frames here on my 5-minute and my 30-minute. I can do that, and that will give me an even better entry because I've mapped out my trades. What I've done is I've set myself up. I've given myself targets, and I've said, listen, if we don't break this target, which is a major daily resistance, we're going down. Where are we going? Hey, this is a 4-hour target, which I can achieve. I can get even closer, and I can turn around and do this. I can say, well, you know what? I want to do 30-minute trade, so I'm going to make this my support at this point. So this is going to be my 30-minute trade. So I can change this color to lawn green. This is my 30-minute support. So I know now that my range is going to be from here to here. And as we start to break down, if I go into the smaller time frames, I go into 5-minute time frames, I can see right now on my 5-minute time frames that there's opportunity for me to say, hey, once this trade breaks down, if it breaks to 30-minute, chances are when we look very closely, we got a clean candle right here. You can see in this area here, there's a whole lot of empty space to be filled if indeed we're going down. And we can look at this candle to mirror this section over here, and you get a clean trade right down to here. And then what you say is you say, well, Ted, how do I then manage the trade to go deeper? Adjust, and I can say, hey, listen, if we continue to break this, I got my 4-hour support right over here, and I can extend that trade. And I don't have to jump charts. I've already mapped that out to say, hey, this is my 4-hour, which is a heavier support than the 30-minute support, but the 30-minute support is my target at that point. Okay. So hopefully that gave you some insight. I wanted to give people this information and allow people to sort of go through this, and if it made sense for people. And now I think with this, there's questions. I will entertain them, and if you want to type them out or if you want to speak, you can raise your hand and I can unmute you. Go from there. If there are wicks to be filled above resistance, price will usually break and retest or just fill a wick. Well, I mean, once again, it depends on what is happening and what time frame you're on. I think that's a little bit more difficult to understand at that point. Let's see. More question. There's another question. So that's, you need a little bit more information there. How do we know if we need to wait for a retest after breaking support or resistance? Well, I mean, once again, it depends on the market structure, right? If you're breaking a heavy resistance or a heavy support on a higher time frame, chances are you're going to need some work related to that. There's going to be some push that you're going to need. When you're working on a daily, chances are the daily level is not going to be broken right away. There's going to be a lot of pushes to that particular area. So that's where you probably get your retests on your higher time frames when you're hitting a higher time frame support or resistance. If there's any questions on the YouTube stream, I mean, I guess we can answer them too. I was hoping there would be more questions. So you could say that when price bounces off a higher time frame, you could take entries off a 5-minute chart once we see rejections. Well, I mean, once again, when you look at that, you have to understand that you have to have a directional bias. The 5-minute chart here, as an example, is bouncing around. So I don't know if it would be proper to be taking an entry off a 5-minute chart here, unless you're willing to say this is going to be my stop loss, and I'm willing to let this bounce, when you might have a wick up and then it might start to drop. So that's where you have to, you know, map out a probability scenario and say this is what makes sense or this is what doesn't make sense. What's the best time to enter a trade? I just explained that. There's no best time to enter a trade. It's the idea of what is the market doing, and do all my time frames line up to make an accurate trade. The smaller time frames will give you less of a drawdown, but you also have to be more cautious of that. What happened to Car? He's around. I have another question. Sure. Okay. All right. Oh, I raised my hand. All right. Sorry. Okay. Unmute. All right. Usama, you can ask away.
Hello there. Yeah. So I had a question, right? Is if we entered a trade, would we enter in 2 positions, and the first position would be, for example, in the half an hour, we'd exit the majority of the trade on the half an hour time frame, for example, and the smaller position we try to convert into a swing trade. Is that what you're trying to say?
Well, yeah, definitely. I mean, you could turn around and say from this point here, I've hit my target, my initial target on a smaller time frame. This could be my longer term target, and as it continues to drop, then you have more opportunity. Keep moving your stop loss here. Your stop loss can go here, then your stop loss can drop to here, and eventually stop loss to here. But what you've done is you've mapped out these other time frames so that you're aware of the other impacts if you're moving in that direction. Does that make sense?
Okay. Thank you very much.
No problem.
Yeah. That makes sense.
All right. Lower hand. Okay. How long realistically does it take risk of 2% of an account to build a substantial account? That question can't be answered because we don't have enough variables. We don't have enough information. That's like saying, how much would a woodchuck chuck if a woodchuck would? Don't know. You know, are you trading every day? Are you trading once a day? Are you trading one pair? Are you trading 2 pairs? You know, what do you consider substantial? I think that needs a little bit more of a discretion in terms of asking that question. I was trading consistently over for a few months. By a while ago, I had to trade without stop loss, which virtually damaged my account since I'm scared of losing money. Any results in the closing trades early? Any tips? Well, I think what you have to do is go back and ask yourself why you were trading properly first, and then you decided to trade without a stop loss. Could we discuss the double dip entry option, trade a little bit more in depth if you have time? Yeah, so I think when we're talking about double dipping, a perfect example of a double dip would probably be this idea here, where you took the trade over here on the 4-hour, it dropped here, and then you pulled back, and then we had a partial wick fill there, so you were able to get that trade again. You can see that providing this wick here didn't break above here, we were still probably going to go down. Similar to this wick over here is not breaking the previous wick, and now we're going to continue going down. It's just when you look at the time, we're towards the end of the New York session, basically. All right. Let's see here. You were very thorough. Can you take a look at another pair and describe if you would wait or take, knowing when to take a trade and when to wait was helpful? This applies to all sequences. So you now have the opportunity to go to other pairs and do that exact work. Map out exactly what I just did, starting from the top down and putting that all into perspective. It's the exact same idea all the way across the board with every single pair. This happens with every single pair on every single time frame. The idea now comes down to what is your comfort level with executing, and where are you managing your risk? Where's the best probability to manage your risk at that point? So do you do a top-down approach, but what gives you interest in a certain pair? Do you consider news events or economy? Or are you at things looking at the monthly stage to get interest from analysis? Well, it's once again, it's the pairs that I've been trading many years that I'm comfortable with. So I'm not trying to reinvent the wheel. All I'm trying to say is what goes up must go down, what goes down must go up. And then I'm using variables, both fundamental and technical, to refine that approach. Is it possible to do live back tests like live trading? No. If you start with a smaller account, how would you structure the stop loss and the lot size should be? Well, Victoria, once again, that comes down to what your comfort level is and what you consider a small account. Your risk to ruin, I think that's the biggest thing that you have to look with, right? If you risk 10% on your account, you effectively have only maybe 10 trades or less before your account's gone. So you have to look and say to yourself, well, what's a comfort level? Maybe I need to have a 1 or 2% risk so I have more opportunities to take a trade at that point, right? 2%, basically, maybe you have 50 trades now because 2% times 50 is 100%, right? So, you know, when you go through those ideas, it's your comfort level and your approach to the market. Please, some insights about Forex market from a brokerage owner. Everyone's trying to take your money. Get it? Ted, sometimes I watch you take a buy when wicks are down. What gives you the analysis to do so instead of price continuing to drop? Well, once again, it depends on where the rejection was. As an example, right here on a 4-hour time frame, we can see that the market is continually going up, right? We can see at that point, when the market pulls back from this area over here, we've tapped into this zone here, and that drives price further up at that point. What do you think about entering multiple positions in multiple pairs? Once again, it's your comfort level. I think trading is very individual. I would rather try and keep things simple. If trading multiple pairs and multiple entries are, you know, profitable for you, well, then continue. But I would think that, you know, focusing on one pair and understanding the insides and outs of that one pair is probably going to be profitable over the long run compared to trading multiple pairs and missing opportunities and saying, oh, I missed that or I missed this, where you could grab and focus more attention on just the one idea. Going through too many time frames, I usually find too many areas that worry me. For example, the higher low to the left would put me off from selling a 30-minute target. What time frames on candles would you need to be bearish on? Once again, you'd be looking at the higher time frames because the higher time frames are always going to give you a bias, and you'd be waiting for the lower time frames to match that bias. Ted, everything makes sense. The only thing I get fused with is when you're going through different time frames to look for an entry. Well, once again, you're looking for targets, right? So if I turn around and I go to my hour time frame, what's going to be my target here? Where are we at the hour support, right? This could be a half-hour support. This could be an hour support. So if we're going down, price should return back to this level because we've seen it come through multiple times at that level, right? We've seen it hit that level several times. So there's a good probability that we would come back down when we have momentum, because similar, excuse me, what happened up here, we have that huge drop, we had momentum, momentum came back right to that level, right? You can see where we had momentum go right to. This was sort of a support area, this area here. Momentum dropped right down to that level, and then you can see it sort of rejected at that point. But we got to this area here. So that's what it comes down to, and it comes down to being comfortable with taking that opportunity and managing that risk at that point. That's the bigger thing at that point. All right. I'll unmute you if you raise your hand. I'm not scrolling through that chart. Okay, sure. Okay, go ahead.
Yeah, Ted.
Yep.
Yeah, so the question I asked before, I think you maybe misunderstood or I mistyped. My question was, when you're looking at the charts, you're starting with the monthly and you're working your way down, which I understand. But what do you look for that gives you interest in order to move on from the monthly and so on and so forth? Like, do you have an interest? Like, it's just this, like the pairs you trade, or like do you look at multiple pairs and you see, okay, this one works, this one doesn't work?
Well, I mean, it's a little bit of both. I mean, you look at structure, right? You don't want something that's ranging. You want something that's trending versus ranging. And then, you're essentially looking like, I mean, a lot of times I'll flip between gold and GJ as an example, just because, GJ may be ranging or gold may be ranging. So right now, as an example, you can see here on the 4-hour with gold, we have rejections. So that's an interest because we're starting to move down. Whereas here, we're just sort of hanging out. Like this is just a range at that point. You know what I'm saying? Right? There's movement. We're getting actual drives in the market. Same thing over here. Like I'll look at something like this before I look at something like this. Right? Like this area over here is garbage, whereas this area I like because we're actually getting good.
In reality, you're looking for more like, bigger momentum.
Right.
All right, perfect. Thanks.
Yeah, no problem. All right. If daily closes bullish on gold, would it look up to like a liquidity grab to continue going up? Is this right? Well, I mean, once again, what is your overall bias with gold? We can see right now we're sort of struggling to go further up. So we would have to see more candles in that direction to go up, and you'd probably have to wait a few hours for that. What sessions can you personally trade on a daily basis, considering your pairs of GBP, JPY, and gold? Well, normally just the New York session. It's just the easiest for me. Once you have a stop and targets, when are you generally looking to enter? At the candle close, for example, 1-hour close like this, would you wait for the candle to wick up and then enter on a flip? Potentially, or I'd be looking on a 15-minute chart. I'm anticipating where we're getting volume and how the candles are going to finish. Based on your experience, how would you explain the market movement at New York session open? Is there a pattern that seems to repeat? No. What would you consider a good sample size to confirm your trading plan works when backtesting? I think it's your overall win rate. You're looking at about 70 to 80% win rate. Furthering the question on multiple pairs, would you look at no more than 2 or 3 pairs? Yeah, that's probably easier. 8:30, how do you think I can manage emotion of losing a trade that I'm correct in analysis? I mean, most of the times trades I enter, I am correct, but I put my stop loss to small, exactly the way you explained minutes ago, but also prices momentum. Almost every day it hits stop loss, then it goes the opposite way. Well, what you have to do is you have to then adjust your stop loss. You're placing your stop loss incorrectly. So now maybe you have to be a little bit more generous with your stop loss, right? So if you're trying to place a stop loss on a 15-minute time frame and you're placing your stop loss right over here, maybe you have to place it just a little bit higher. And you have to give yourself a little bit more give. As your experience comes into play, then you can start making your stop loss smaller. and you can start moving it. So maybe you have to reduce your lot size, increase your stop loss to allow the market to move a little bit more freely. The fact that you're stressed about that means that you are fighting because you need the money. You should not be doing this for the money yet. You should be doing this for the passion and the process. Your job should be paying for your bills. Trading should be a hobby. The stress will be removed at that point. If gold stopped you out, would you re-enter or change your bias or just wait for another setup? I'd probably wait it for another setup. Do you ever trade gold between London close and New York close? No, I answered that question. What are the market tendencies at New York time frame, London time frames for gold and GJ? Well, I mean, you can watch the YouTube channel and that'll help you a lot. What's the best entry signal, lower time frame like M15 or M30 for scalping? Does this mean you only hold a trade for the time frame which you've entered? No. Once again, Lyndon, I explained the whole process of how you would anticipate this. The idea, once again, is you're mapping out an area of interest, this area or this area, and you are planning your trade to a certain point. You have to map that out, whether it's on the hour time frame, the 4-hour time frame, or the 30-minute time frame. You're mapping out an area of interest and executing to that target. So it doesn't matter if you executed on the 5-minute and you're holding to the hourly close or the hourly candle. It's where does the target make sense? Where is there clean traffic for me to move, and how are the candles or the price moving? What is the setup you look for? I just said that. How do you know support or resistance will hold or break? I told you, you don't know that. You have to wait and see what happens. And you look at your higher time frames for information. Okay. Can you explain what a booby-trap candle is? Yeah, when you have a candle that goes in a certain direction, that doesn't make sense. So if we look over here as an example, where do you think a booby-trap candle is? Very straightforward. This candle doesn't make sense because we had all this drop and now suddenly it goes up. This candle over here doesn't make sense because we're moving up. Right? So those are booby-trap candles. Here's a booby-trap candle. Here's a booby-trap candle, right? You're looking through the idea of the charts, and you're saying, hey, that candle doesn't make sense, right? If we're looking closely here at this example right here, this candle doesn't make sense. Why is it a bearish candle when I've had 15 minutes of bullish movement? So that's probably a booby-trap candle if I see the next candle go bullish. How do you deal with the fear of missing out? Experience. Are you planning to trade live on demo? No. How do you manage your trades in terms of closing them? Just take partial profits or letting them run? It depends on the market structure. Like here as an example, you take a trade and you see that the trade is stalling out over here before it hits your target. Maybe you want to close that trade out to get profit. Okay. All right, there's another question. Yes, hello.
Yeah, hello there. I just had a question. Another question is when say you find your ideal entry, would you rather than entering there and then wait for a liquidity grab, then enter, or would you just enter?
Well, you just said you found your ideal entry, so why aren't you just entering?
Okay.
You said you found your ideal entry, so that's your
I
ideal
understand that,
entry.
but I'm saying just in case, wouldn't it?
Then it's not an ideal entry. It's not an ideal entry.
Okay.
Right? See what you did?
Okay,
You put yourself in a box.
Yeah.
So you either have to say I'm taking that entry and striking, or I'm not striking. Like, if you found the perfect girl, you can't turn around and be like, well, what if she turns out not to be perfect? Well, at the time you said it was perfect.
Okay. Yes. Thank you.
No problem, Usama.
Bruh.
All right. What I'm going to do is I'm going to try and figure out how to do this, but everybody who's in this chat, what we are doing is we are giving away two $25,000 accounts today. This is the surprise for everybody. We're giving away two $25,000 accounts from the Traders Central Fund. So we are over here. This is what we are giving away. We are giving away a couple of accounts, and I'm going to try and do this very, I guess, as independent or as much as I can in terms of the giveaway. So let's try and find a random. What do we want to do? Random generator name picker. Ah, that's right. All right. So here we go. We have a picker. So let's see if we can do this. No, we're not doing pick me. Trade with Monty. We're gonna do AB admin 5, AJG. Yeah, I'm gonna have to go through this. This is crazy. I would say please tell me your names, but then it'll be nuts. Albert, Alex A, Alexander. Yeah, you just keep. I'm just gonna turn off the chat. That's stupid. You guys are all just talking nonsense. We're gonna do A LSU, and then there. Sorry, I'm not doing anything special with people's names. Pooh, that's cool. Arthur. Oh, there's two Austins. Austin 1, Austin 2. Austin, hold on. You are Austin 1. Okay, so there's confirmed you are Austin 1. Okay. And then there's Austin S. So that's good. Bave. We got Big B, Bill, Black Box, Brian 19, Kashi, CCFX. Oh, I should have. There should be an easier way to do this, but I don't know. Charles, Damien, Daniel, Darian, David. Hopefully, there's not too many Davids. All right. Devon, Diego, Doran, Ellie. Holy cow, there's a lot of people here, right? 100. Ellie Escobar. Fabian. Gab, Gaggy. Oh, Frankie, forgot that. Sorry, that probably messed you up. Galaxy Note 9, Herman, Uza, Fa, Echo, Ekrama, IPH, iPhone, Jose. Holy cow. Ivan Barrels, J, iPad, James H, Jan. Juve, JWR, Kid Rock, cool. Summertime, pause. Tile, Laszlo, Glenn. Here, let me see, Mike, Miles, Mo. Holy cow, there's legitimately 100 here. Mo never stops. LF, nephew Ted. He's not actually my nephew, so if he wins, that's fine. Pablo, Ralph, Shad, Rashad, Gary, Herbie, Ray, Bush. Just sorry, I just shortened your name. Chanel, Tay, Tony, Two, three, Trevor. Right, we are almost done. You, Sama, Victoria, Vinny, Wickedy, Wick. All right, two names, Hugo and Ty. Oh, man. All right, we've got everybody. Let me see the chat box. I skipped Owen. Sorry. All right. Okay. There we go. Owen's in. Sorry. Slip Joe? How did I miss Joe too? All right. All right. I have everybody. Anthony. How did I miss all these people? Anthony. Mantis. Oh, okay. Sorry. Hermie. All right. How am I missing these people? Oh, maybe I didn't do it at the right time. Astra. KWR. Okay. All right. Double check. I have iPhone. Oh, do I not have iPhone? No. All right. So let's make sure we got this set up. Sorry. Manjeet. No, I don't have Manjeet. I would have remembered that. Manjeet. iPhone. I thought I had that. IPH. SE de Philippe. All right. Austin Starbuck. Usama, I added you. Usama, you're right here. Trade with Herm. No, I don't have you. Trade with Herm. Ralph. Yeah. I mean, it doesn't matter either way. You're just gonna get disqualified. I thought we had. Yeah, we have everybody, right? Okay. It's just for people that are in this chat. The 100 people that are in this chat. That's all. We're not adding everybody on YouTube too. It's way too many people. All right. On shuffle. I wonder if I could have added the image. Oh yeah, Owen, I forgot you. Sorry, you're there. Yeah. Okay. All right. Count names. Do a counter. All right. Hold on. Let's see. All right. Giveaway for what? Well, it's going to be a $25,000 account from this group here. So this is what we are going to get. Hi, how can I help you? We're good. All right. So this is what we're going to do. Well, we're not doing that yet. We didn't do it. Okay. So we've got everybody set up on the wheel of names. We are going to do a spin and ready to go. Let's shuffle this up. There we go. First spin. There you go. That's the spin that we're looking for. Oh, we have a winner, Trevor. So Trevor, send me a message. Give me your email address so that we can get that taken care of for you. So Trevor, send me a private message. Private message, Trevor. Trevor. If you're not here, I spin again. Trevor. Oh, there we go. Found him. Perfect. Thank you, Trevor. Okay. He's here. All right. Let me do that. All right, so that was our first winner. Remove him. And now we are going for our next person to win. And here we go. Spinning, we got 98 names left. Spin. Ooh, who can it be? Who can it be? Ooh, Len. Len is our second winner. Len, message me privately right now. And there we go. Len. Yo, I need your email address. Just don't say yo. Congrats. So both of you guys have a $25,000 account that you will be using with the Trader Central. They're going to set you up with everything. There's only one Len. Was there not one Len? I thought there was one Len. Is there two Lens? Oh no. Did I screw up? Oh shit, there's two Lens. My mistake. Sorry. Sorry, we have to do this again. I have to add another Len.
Bruh.
My apologies. Okay, so we got Len and Len Barney. My apologies. Sorry. Unless you guys wanted to split it 15,000 each or 12,000 each. All right, sorry about that. Okay, we're gonna spin again. All right. We had two Lens. I didn't know which one, so it's not fair. So we're doing another spin. My apologies. Ooh, Kashi. All right, Kashi. There's three Lens. All right, Kashi. All right, there's Kashi. Send me a note. There's three Kashis? No.
Ranked.
All right, so Kashi, send me a note. That's not fair. It's a giveaway. I'm sorry. I put in, I didn't have both Lens there. Wouldn't know which Lens to give. I apologize. All right, Kashi, send me a DM, please. Send me a message. More giveaways. Kashi, send me your name, your email. Thank you. All right. Perfect. Okay, so we got good. So that was our giveaway. Hopefully you guys participated. I really appreciate that. I wanted people to have an opportunity. Thank you for the Trader Central Fund. Once again, guys, definitely check them out. I mean, they're doing some good work for everybody. You can go on here. This is the website. You can go on there, check to see how you can participate. They have a lot of podcasts. You got information here. They did with me. They did with right now responsibilities. I think we talked a little bit with No Lie, trading memes, Chris, Elite Traders Club. So there's lots of information on there, and definitely check that out. But with that being said, I think we had a good time, and tomorrow will be the new another setup, and we'll see what we can do with our final week of the final day of the giveaways. And like I said, watch this video over and enjoy. So thank you, everybody. We shall chat and enjoy.